auction. The Central Bank of Nigeria is offering 600 billion naira across two maturities in today's OMO auction. Analysts at UBA say they expect the positive sentiment in the Treasury bills market to persist in the near term, barring any significant liquidity outflows. Chuka Nwachukwu, Chief Dealer and Head of Trading at UBA, joins me for a market discussion. Chuka, 600 billion, how's the OMO auction fared today so far?
Thank you, Aki. Good afternoon. The result just came out about 30 minutes ago. Like you rightly mentioned, 600 billion was on offer. The whopping subscription was about 3 trillion. And then they sold 2.5 trillion, mainly about 2.9 trillion for the longer end, which is 173 days. And then the 152 days, they sold about 600 billion. It's stated, we saw the rates drop drop almost about 1 Naira. Yeah, so for the market, it's been a bullish sentiment throughout this week, and then of course last week, liquidity has been, the system has been awash with liquidity. This morning, market opened above 5 trillion, and so by the time this 2.5 trillion is off the market will still be, still be very liquid, over 3.5 to 4 trillion. So basically, what we've been seeing is bullish sentiment driven by system liquidity.
All right, let's look at also how the government is repricing in terms of what it's offering. And then we heard as of yesterday that Parliament approved the 1.15 trillion domestic borrowing to fund the 2025 budget. Do you think this is also giving investors the room that government has more appetite for borrowing?
Yeah, absolutely. I mean, towards the end of the year, this time of the year, we expect that the activity will start winding down. But again, with the government, concentrating on more of infrastructural development, you see most of the roads are under construction. Most of policies that get towards developmental projects are on. So I think that's one of the reasons why the president has sent more, has sent for more borrowing, about 1.1 trillion, in order to offset some of the obligations that they have. And so that obviously, affected the market because, of course, the government is looking to borrow, and they will obviously make use attractive. And that's why we've seen that the OMO was oversubscribed. And then, of course, the bond as well. The bond wasn't oversubscribed, but again, we've seen a lot of interest, buying interest in our bond, and that obviously is testament to the investors' confidence in the Nigerian economy, especially with the B rating of some of these rating agencies, and so it's looking good for the government and generally for the economy.
Let's look at how long this positive sentiment can be sustained, mid to long term or short term. What's your projections?
If you watch the Nigerian economic outlook and then you watch the projection and of course the figures that just came out, you'll find out that the sustainability of this growth is there. We are looking at maybe within the next 1 year or so. But again, because next year is a year before the election, so we probably might see, a lot of government activities slow down towards the end of the year. But between now and then, maybe in the next September, October next year, we see a lot of developmental projects. We see a lot of spending from the government, and that obviously means that the government will have to borrow more, and then borrowing more means that the fixed income market yield there will continue to be elevated, just to make it attractive for investors to bring in this much needed fund government needs for infrastructural development.
Let's look at the bond market, and yields already around 15%. Doesn't still give the same signal as the Treasury bills market. Is there any silver lining?
Well, the bond market is seasonal. So there are times when the market is on the yield is elevated, and then towards the end of the year, the yields gradually decline, and that's what we are seeing presently. So normally, this is the time for most traders and investors to take profit. So we've seen a yield drop by about 400 to 500 basis points between April and then October. And so if you're carrying a portfolio at 19% and yield is currently at 15%, I mean, it's no brainer. Obviously, we have to sell in order to, to realize income and then prepare for next year. And so normally January, first quarter of the year, we expect you to elevate because obviously government will be looking to borrow, like I said earlier, and then of course they'll make the yield attractive. So this time is time for most investors to take profit, especially with the yield levels, and of course those who bought earlier at the higher yield level. It's time for them to cash in and then prepare for first quarter of next year.
And let's look at the currencies now. And I'm sure at this point in time, you wouldn't advise anybody to bet against the Naira, looking at how well the Naira is trending against the dollars.
Yeah, so I mean, Naira, like I said, throughout this year has been stable. If there's one thing that the CBN has done perfectly well is the stability of the Naira. So we've seen Naira trade between 14.43 to 14.47. So stability has been the name of the game for Naira for the past 6-7 months, and so we expect this stability to continue. As long as the inflation figure continues to drop, we see that the CBN will continue to react. And, like this governor has said, and he has maintained over time that, look, exchange rate stability, it's one of his primary aim. And then, of course, to keep the exchange rate stability, he has to ensure that we have more liquidity in terms of dollar, into the system in order to meet the demand. And so far they've done extremely well. And of course, I expect the Naira to continue to be stable between now and then towards the end of the first quarter of next year.
All right, I'm sure towards the MPC meeting for this month, we'll be asking you questions regarding what you expect. Maybe they will still have a hawkish stance or will still maintain what we are. Thank you very much, Chuka. That was Chuka Nwachukwu, Chief Dealer and Head of Trading at UBA.